Hi crypto kings and queens, welcome to my channel. My name is Natalie. In today's episode, I'm gonna do market structure 2. The last video we were just going through the higher time frames, higher highs and higher lows and lower highs. In this episode, I will break everything down on what happens when the market is breaking the structure on the higher low for us to find a buy position, and when the market is breaking the structure when we want to find a sell position at the lower high. And if you don't understand this, guys, this is super important. If you don't understand this, you will never be able to understand trading overall, because this is how the market is moving, and it's going to benefit so much for you as a trader to understand the basic of trading. So continue watching this video and I'll show you exactly how I see the market and how I do it when I am breaking everything down from the higher time frames to the lower time frames. So continue watching this video if you want to be a profitable trader. And guys, if you haven't looked at my previous video about market structure, start off with them. You'll have it somewhere up here, the link directly to that video. So this is super good for you to start to look at before you're looking at the lower time frames. And if you're scrolling down to the description, you can also see that on Bybit, we do have a bonus up to $4,100 right now. You're having the link in the description down below. And this is for you if you are a swing trader, if you want to hold your positions, obviously for a longer time with very low fees while the market is actually on its way to your targets. If there are any questions that you'll have, we're having the Bitcoinsensus community. You're more than welcome to be a part of that. We're having on Telegram and we're also having it on Discord. So you're more than welcome to be a part of us. But remember, on Bybit, we do have a bonus up to $4,100. Last time I did talk about these higher highs and higher lows on the higher time frames, and that we need to understand how market is moving. The higher high, you have the higher low, and in a uptrend we want to buy at the higher low, and in a downtrend we want to sell at the lower high, right? Because we want, on a uptrend, we want to have the lowest price as possible to take advantage of the impulsive move that creates the higher high, and in a downtrend we want to sell as high as possible to have the most benefit of the whole movement when we're coming back down. So that is why it's really important for us to analyze the market from the higher time frames. And just as I told you on the other video, when we're using different tools to calculate where potentially that higher low can be or the lower high can be, that's when we're zooming in everything and starts to break everything down. So for example, when we are at the higher low, we want to buy at these levels, right? I'm using is obviously trend lines. I use support and resistance zones, and I'm using the Fibonacci to see potentially where the market can be. And I'm using Fibonacci in every time frame. I'm not going to go through Fibonacci on this video, but that's how I can calculate where potential the higher low or lower high can be for me to be able to go into a position. So when we are looking at this, for example, so now we're going to pretend that this is a weekly chart, so we can see clear market structure. Market goes higher high, higher low, higher high, higher low, right? But then when you're going down to the lower time frames, you will obviously see more things happening. So that is why sometimes you can be very confused, because it looks so choppy. It's so many candlesticks, it's so many ups and downs trends, so you have no clue what you're looking at. But when you're having the market in a higher high, so for example, when you're looking at the daily, you can also see more clear that you create higher highs and higher lows on the daily chart or on the 4-hour chart inside the huge candlestick that we're having on the weekly chart. And the same thing is that when the market is going down on the weekly chart, on the lower time frames, you'll see different upside and downside trends. And that is why we're trying to figure out on the higher time frames where could potentially the weekly chart's higher low be. So usually what I do, I'm taking Fibonacci from the lowest point to the highest point, and then when I see market coming to that level, I start to break down. So in a downtrend, this is how it looks on the 4-hour chart. So for example, now we have to imagine that what's going on right here is this happening. So the market is right here. On the 4-hour chart, the market is in a downtrend. So the market is creating lower lows and lower highs until we're coming back down to the level that we did expect the market potentially come back down to. And what happens is that when you're having the downtrend right here, you can have a trend line to see the market is still below the trend line also confirming that we are still in a downtrend. But then when you see the market breaking the structure, this is how it looks if we're zooming in. Market goes back down, then market starts to break the downtrend and become an uptrend, and this is how it looks. So the market comes back down. So this is what's happening right here. Just zooming in, market comes up, creates a last lower high, creates the last lower low, then market breaks the lower high, comes back, but it never has the power to break this previous lower low, and now we are creating a higher low. And as long as we're holding ourselves above this line, the market potentially can start now to continue to the upside. So it doesn't matter if you're on the lower time frames, on the 4-hour chart, 1-hour chart, 30-minute chart. This is happening on every time frame. You can see the break of structure, and this is how it looks every time. And when we're going to the downtrend, you'll see the market in a uptrend. So this is the pullback that we're seeing on the weekly chart. So maybe we are looking at the 4-hour chart right now. So this is how it looks. So the market is in a uptrend. This is the pullback. And that is why it's so important that we understand that it's a pullback, because when the market is maybe touching our Fibonacci level, we start to see the market starts to break the uptrend and becomes a downtrend. So what we're looking at when we want to see the market breaking the uptrend, we want to see the market break structure by breaking this previous higher low and then create a lower high against that level. So this is a break of market structure, and then market continues back down. So when we're looking at the higher time frames and we are having our targets to potentially where the market can reverse from, that is when we are breaking everything down to the lower time frames. So before this impulsive move have happened, we are zooming in to where the higher low can be created, and that's when we're taking the action on the lower time frames to see the break of the structure. When the market comes to these levels, previous higher high becomes a higher low, maybe also combined with a Fibonacci with a 50 and 61% level. And when we're seeing the market coming back down, and now on the lower time frames we see the market breaking the structure, that's when we are taking the decisions to going for a long position or for a short position. So on the uptrend, market creates higher highs and higher lows, comes to where we potentially have our previous higher low right here. Market comes up, break that level. We're having the uptrend, zooming into the lower time frames because we could potentially see that this is happening right now. The lower high would be created. Then we're zooming into the lower time frames. We see the uptrend happening right here, right here. Then market breaks structure, retest this previous higher low right here, and then we're taking a sell order and we're riding on the wave to the lower low. And then what happens when we're coming to the lower low? This is going to happen. Market is in a downtrend, right? Market is in a downtrend. Market is in a downtrend. Market comes to the lower low, and then market breaks the downtrend by creating a pullback. So we see the market breaking the downtrend, create a uptrend with the higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, until we're coming to a previous lower low combined with Fibonacci. And then we see this happening again. Market has the uptrend, just like here. Then market comes and breaks the uptrend by breaking the structure with breaking the higher low, retest, and then market breaks to the downside again. So market goes up, breaks structure, looking like something like this, also like this. Market goes back down. And that is the same thing we're doing over and over again. I hope you understood this. This is I try to make it as simple as possible for you. Sometimes it's hard because looking at this is easy, but then you're going to the charts and it's choppy, and you really have to back test this yourself so you can understand using the support and resistance zones, Fibonacci levels. You definitely need to learn how to use the right levels for you to be able to spot these breaks of structure. And it doesn't matter, this could also be an hour chart, and then this is the 5-minute chart. This could be the 4-hour chart, and this could be the 30-minute chart. It doesn't matter because the market is always doing the same thing. But if you want to take advantage of the whole movement, that's when you're looking at the higher time frames. But obviously that depends on what type of trader you are. If you're a scalper or if you're a day trader, if you're a swing trader, everything depends. But this works on every time frame. As long as you're combining minimum 2 or 3 time frames, you can use difference, but you have to use a higher time frames, and then you're breaking it down to the lower time frames to see the break of the structure for you to be able to take a long position or a short position. So for example, right now we're looking at Bitcoin on the weekly chart. So before we did have this pullback, as you can see, the market did create a higher high, higher low, higher high, and now the market is creating a higher low as long as we're not breaking this previous higher low created. When you're looking at the lower time frames, this looks super scary because the market is just going back down. But as long as we're not breaking the previous higher low, we are still in the uptrend. And this is what I'm always trying to tell you guys, that you should not panic about Bitcoin unless we're not seeing the market actually breaking this level and you see the break of the structure. But we are still in a bullish trend. This is the weekly chart, and just by going to the daily chart, you can see more clear on what's actually going on right here. So this is what's exactly what I was talking about before. We're looking at the weekly, and now we're breaking it down to the daily. You can see market come. This was the uptrend, higher high, higher low, higher high, higher low, higher high. Market breaks the previous higher low, creates a lower low, comes up, and we almost retest the same level. It's never going to be perfect, guys. And then market comes back down, create a last lower low, lower high, lower low. What happens? Market breaks the trend, comes up, break what? The higher low, and then market slowly breaks to the upside again, creates higher high, higher low, higher high. What happens? Market is breaking the trend line, market is breaking the higher low, and market starts to create lower lows and lower highs. And we're still maintaining the lower lows and lower highs. As you can see, we just might come back down a little bit more, and then you see the last push, market breaks the structure, and then you see slowly breaking to the upside. What you see right here, obviously it's not always going to be perfect. That's exactly what we're looking at right here. Market goes down on Bitcoin when we find the support, and then market comes to a Fibonacci levels, previous support resistance zone, previous higher low zones. This is when the market break of market structure we're looking at, and we're trying to spot that before it actually happens. So looking at Bitcoin right now, what I am looking at is at this previous high low that we're having, going down to the lower time frames. What I am looking at is that the market will push back down even more, comes back up, creates the last lower low, creates a lower higher low, respect the previous lower high, market then slowly breaks to the upside. So this is exactly what I'm looking for now on Bitcoin. Just as you can see right here, you had the pullback on the daily. You're having the pullback on the daily, even if it's a huge drop. But guys, we're still not breaking the previous higher low. Market comes back down, does the last touch, break the structure, and then slowly breaks to the upside again. Going to the 4-hour chart, this is how it looks. So we are having the market going down, creates lower lows and lower highs. What happens? The last lower high comes back down for a last support, breaks the lower high, starts to create higher highs and higher lows. So guys, I hope you understood what I was talking about with the break of structure when we're going down to the lower time frames. And as I told you, this can happen if you're using the 4-hour chart against the 15-minute chart. So as long as you know what direction you're looking at and when you expect the market to actually reverse, and when you see the market coming to those levels that you potentially can see the market reverse from, that's when you start to zoom in. If you start to see the market actually breaking the structure on the lower time frames, because if you're only looking at the weekly or daily, you will never be able to see it will take forever for you to go inside a trade. But using higher time frames, and then you see the target, then that is why you always should have patience and let the market come to you. So you have a level, you're waiting for the market to come to that level, and after that, when the market is there, that's when you're starting to break everything down. So everything is as a puzzle. So you're just trying to combine the higher time frames with the smaller time frames, etc., etc. And the more you're back testing this, the more you will actually actually understand. So just print screen this, and this is what you're looking for. And then when you're going to the higher time frames, look at what happens when the market is actually breaking the structure, when you see the market breaking the uptrend or the downtrend. So thank you so much, guys, for looking at this video. Please comment below if you enjoyed this video and if you want to see more of it, and just give me comments, give me feedback. Did you understand it? Did you not understand it? Was it maybe the first time you actually did understand it? Because I had so many good feedbacks from the last video that I did on market structure. So thank you so much, guys. I hope you will have a good day, a good weekend, and we see each other in tomorrow's live stream. Please subscribe to the channel so you will never miss a video that I put up on these cryptocurrencies pairs or these market structure, or if you want me to look at support resistance zones later on. Have a good day. We'll see each other later. From Sweden.